I am absolutely dumbfounded by how in the world 70 plus million shares of Keel Infrastructure can have been sold short. At least that's what's being reported by the Wall Street Journal website as of April 30th, 2026. Over 70 million shares of Keel Infrastructure have been sold short. And that amount increased as of that reporting. Now, it got me wondering, is there something that the shorts are seeing that many of us who are incredibly bullish about the future of Keel Infrastructure are either completely oblivious to or perhaps ignoring? So I went on a bit of a mission to discover what it is that short sellers find so intriguing and so appetizing, so to speak, about shares of Keel Infrastructure that they've gobbled up over 70 million shares basically to sell short. Okay, so here's what I discovered in a nutshell. There are three basic things that the shorts are really zooming in on. The first of which is that Keel Infrastructure has made no secret of its desire to wind down, I should really say, its entire Bitcoin mining operation through a big portion of its portfolio now in 2026, because, of course, if a lease is going to be signed at Moses Lake, if a lease is going to be signed at Sharon, if a lease is going to be signed at Panther Creek, then those sites would be decommissioned as Bitcoin mining sites so that construction can proceed unabated. Now, what that means is that the company basically earns less revenue. And so that's something that shorts have really kind of zoomed in on as being problematic, or at least in their mind, potentially problematic for Keel Infrastructure, because the less revenue you have, the less money you have to work with. And therefore, this comes up now to the second thing they're really zooming in on. The more likely it is that the company, meaning Keel Infrastructure, would have to go into the market and raise a bunch of capital through more at-the-market offerings. After all, there is something of a shelf of registration floating around out there that has yet to really be put into action, but that's there at the waiting for market conditions, as we've heard Mr. Jonathan Murr, CFO of Keel Infrastructure, repeatedly mention, as well as Ben Gagnon, CEO of Keel Infrastructure. They've, in so many words, I'm paraphrasing here, hey, if market conditions warrant, hey, there may be an opportunity to take some action, right? Between you and me, I don't think that the company's really out there intentionally, like chomping at the proverbial bit to try to just sell a bunch of stock and dilute shareholders, right? But we also have to keep in mind that last October, right, shares of Keel Infrastructure were starting to rally, and the company, hey, for better or for worse, saw that as an opportunity to raise a bunch of capital, and so they did so. Shorts, from their perspective, appear to be looking at that, though, as a net negative for a company that already, as of Q1 2026, has about 603 million shares outstanding. That's a lot of stock, my friends. And so to the extent the thinking is, hey, this company may have to go into the market and raise a bunch of capital to help support their ongoing business activities because they're not getting enough revenue coming in from Bitcoin mining anymore, well, that's a net negative for the stock. And then the third thing that shorts seem to be zooming in on is this idea that Keel Infrastructure has yet to actually sign a lease, and that because of the mercurial way in which construction oftentimes can proceed, you could very well have delays that have not really been priced into the stock price. You could have situations arise that simply do not allow Keel Infrastructure to manifest into Newtonian reality the words which we have heard over and over and over again, which is that the company intends to sign 3 lease deals in 2026 by year's end: Moses Lake, Sharon, and Panther Creek. So in a nutshell, that is what shorts see. Now, I beg to differ to an extent with this particular viewpoint. So let me first acknowledge something that the shorts, I do think, are legitimately noticing, which we're all noticing. We're taking a look. Let's pull up the slide. This is a slide from the Q1 2026 investor presentation, which just took place on Monday, May 11th, 2026. So revenue for the first quarter of 2026 was $37 million. That's down from the same period in 2025. The operating loss that Keel Infrastructure reported for Q1 2026, $98 million. Loss from continuing operations, a staggering $128 million loss. Adjusted EBITDA, a negative $17 million. These numbers are demonstrably worse than they were, back to me by the way, they're demonstrably worse than what they were in Q1 of 2025. So yes, shorts are right. Things on the surface look kind of bleak. They don't really look that good, right? Now, what I don't necessarily know that shorts are fully taking into consideration is what is on the next slide. Okay, let's pull it up, please. So as we can see here, the company's liquidity position is legitimately amazing. Okay, let's just read this verbatim. So as of basically May 8th, 2026, a couple of days before the investor presentation, the company had $533 million in liquidity, and that consists of cash and Bitcoin. Now, that, according to Keel Infrastructure, is more than sufficient capital to advance Panther Creek, Sharon, and Moses Lake through lease execution and the start of construction at Moses Lake, and cover Keel's general and administrative expenses through 2028. Okay, now, if we look to the right-hand side of this slide, it clearly points out, here's the goal. We're going to deploy capital to advance Panther Creek, Sharon, and Moses Lake. Hey, lease execution enables the transition to a project-level financing model supported by long-term contracted cash flows. And we're going to get into more about that in just a split second here. And then finally, hey, the balance sheet is prepared for financing of projects. Liquidity position is strong. Okay, back to me now, please. So, hey, it's not like Keel has to go out into the market and necessarily just immediately dilute shareholders the moment a lease deal is signed so as to raise the tens of billions of dollars that are necessary to build the data center. It becomes a project level financing situation where, hey, you have already then a lease deal in hand, which you can then take and then get financed. Yes, there is going to be an equity component that Keel Infrastructure is going to have to put into that, but it's not quite the same as saying, Keel's going to go into the market, sell, 500 million more shares, bringing the total share count to $1.2 billion just to finance the, build out of, say, the Sharon site. See what I mean? Now, short sellers by their nature tend to be incredibly intelligent people because they're having to by the nature of short selling itself, they've got to really get it right. There's not a whole lot of room for error, and their potential losses can be just absolutely unlimited, right? Because after all, the stock can just keep going up, 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 and up, right? And so, it's a real concern. So, is it plausible that short sellers would have overlooked this? Is it plausible that perhaps they haven't overlooked it, but perhaps just have a somewhat more negative disposition as to the future of Keel Infrastructure? Maybe they're not quite so bullish on these plans being executed in 2026, thus raising a lot of concern in the market, right? Hey, is Keel Infrastructure all talk and no action, right? Hey, I can't fully get inside the minds of everyone who's out there, every institution who has essentially elected to short 70 plus million shares of this company. I think it's an incredibly risky bet because, as we've already seen, Keel Infrastructure and its shares can really start to move to the upside, right? Hey, this stock can be very volatile, both upwards and downwards, but I'll tell you something. I don't think the shorts have it right. I legitimately believe that Keel Infrastructure is going to execute on its stated mission of signing 3 lease deals in 2026. Moses Lake, Sharon, and Panther Creek. Now, if any of those 3 sites were to not be signed but perhaps two of them are, or one of them are. I think that's going to be enough to signal to the market, okay, Keel Infrastructure is clearly executing. And assuming that, of course, Keel has a rational, valid explanation for why there may be a delay in executing those leases for the other sites, I think the market can be somewhat forgiving. But I'll tell you, it is just absolutely shocking to me that so many shares of this company are being sold short. Okay, if you enjoy these broadcasts, please consider liking and subscribing, and we will see each other again tomorrow.